Hello, everyone. My name is Donna Silknetter.
And I'm Lynette Kleindens.
We are with the PCAOB's Office of the Chief Auditor, as Brian mentioned, and it's a pleasure to be here today. Before we begin, we need to give the standard disclaimer. This presentation is provided in our official capacity as PCAOB staff members, but the views expressed are our own and do not necessarily reflect the views of the board members, or other members of the staff. Today we'll provide an overview of the activities of the Office of the Chief Auditor, which includes a discussion of recently adopted standards and amendments. Several of these rulemakings are already effective or will be effective soon, so we wanted to highlight some of the key provisions and implementation resources that are available. And then we will also touch on some of the specific resources that are available for smaller firms that Board Member Thompson mentioned this morning. Lastly, we'll talk about implementing QC 1000, the new quality control standard adopted last year. We've talked a lot about QC 1000, both at these forums and at a series of workshops for smaller firms that were held over the past few months. But it's an important standard, and today, in addition to providing an overview, we will focus on areas where we've received questions. And as with other sessions, you can submit questions through Conferences.io, and time permitting, we will take time to address them. Before we jump into the presentation, I want to show you where you can find the latest information on our standard setting activities. This slide is a screenshot of the menu that appears on the standards page on the PCAOB's website. To get to this menu from the home page, you go to Oversight and then click on the Standards page. The second tab takes you to the standard setting agenda, which includes short-term projects, mid-term projects, research projects, and other rulemaking activities that the staff is working on. The agenda is updated from time to time as circumstances change or as we gain more insights based on our oversight activities. Because we have not added any new projects, we won't be covering any in-process projects today. Instead, we're going to focus our presentation on those that have been recently adopted. And to be informed about the latest information published, we encourage you to sign up for alerts from our website. Since we are discussing recently completed projects today, I also wanted to highlight that once adopted and approved, each project gets an implementation webpage. And on that page, you can find that by clicking on this tab on the standards page of our website. Each project implementation page includes a summary of the new standards and amendments, as well as links to the adopting release, rule text, and SEC's approval order. What you will also find on this page is any implementation guidance and resources that the staff issues. As we go through each project today, we'll highlight the relevant available implementation resources. The type of resources available will vary depending on the project and the nature of the standard or rule and the extent of changes made. So for example, as Lynette will cover in a little bit, the QC 1000 implementation page has many resources from staff presentation videos to guidance and practice aids. It's important to note that the staff may develop additional implementation resources as questions arise. So what you see today for a particular project may be supplemented by additional materials in the future. And this slide here lists the 4 completed projects that we're going to be discussing today. We did touch on these last year, but wanted to highlight the key points for each project, and we'll start with confirmation. The new standard on confirmation became effective for audits of financial statements for fiscal years on or after June 15th, 2025. So we wanted to just provide a few reminders on some important areas addressed by the new standard that you'll see listed here on the slide. For confirmations to provide high-quality evidence, the auditor should maintain control over the confirmation process. And a big part of maintaining control is directing the request to the appropriate confirming party. The auditor is required to direct confirmation requests to those who are knowledgeable about the information to be confirmed and determine that a confirmation request is properly addressed. The standard does not prescribe procedures or specific procedures for determining that the confirmation requests are properly addressed. The auditor can tailor the procedures to the facts and circumstances of the audit. So Lynette, what happens when an intermediary is involved?
Good question, Donna. In that case, the auditor is required to evaluate the implications of using an intermediary on the reliability of the confirmation process. The new standard describes the auditor should perform, including obtaining an understanding of the intermediary's controls over the risk of interception and alteration, and determining whether they are designed and operate effectively.
Thanks, Lynette. Now I want to make sure we also cover negative confirmation requests. As you know, negative confirmation requests provide less evidence than positive confirmation requests. In today's environment, there is a high likelihood that a negative confirmation request would not even be considered by the recipient. This could be because either the recipient treats the request with suspicion, such as if it's a phishing attempt, or not even receive it at all, for example, if the email request was then caught in a spam filter. Under the new standard, negative confirmation requests cannot be used as the sole procedures to address a risk of material misstatement. The auditor can still use negative confirmation requests, but they need to be performed in combination with other substantive procedures. And then the last topic I just wanted to cover is related to confirming cash and accounts receivable. Interesting, the requirement to confirm cash is new. While that has typically been done in practice by auditors, there was not a specific requirement to do so in the auditing standards before. Under the new standard for cash and accounts receivable, the auditor is required to perform confirmation procedures or otherwise obtain relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source. So what is an example of directly accessing information? One example could be if the auditor obtains read-only access to information maintained by the financial institution about the company's cash balances directly online, either through a secure website or using credentials furnished to the auditor by that financial institution. The standard does not prescribe a particular way of directly accessing information maintained by a knowledgeable external source. And depending on the company you're auditing, you may determine that, at least currently, confirmation is still your first choice. But the key here is that as new audit tools and techniques become available, their appropriate use is allowed by PCAOB standards. With respect to confirming accounts receivable, the standard carries forward original requirements to confirm accounts receivable. Unlike with cash, there may be scenarios related to receivables where using confirmation procedures or other ways of accessing the information at the third party is not quite feasible. And the new standard addresses these situations when confirming information is not quite feasible. For example, if you've got industries with a history of low response rates, such as healthcare or utilities, or situations where customers could be advised by a government agency, like a banking regulator, to avoid providing personal or financial information in response to an unexpected request. If it's not feasible to obtain external information directly through confirmation, the auditor is required to obtain external information indirectly by performing other substantive procedures, including test of details. And the standard does not prescribe the nature, timing, or extent of these audit procedures. And then the auditor will be able to determine that based on their facts and circumstances. So next, I want to highlight that this just brings us to the implementation page for the confirmation standard. On the confirmation implementation page, you'll find a staff presentation that discusses the provisions of the final standard in detail. And we've also provided a separate knowledge check, which is a series of questions designed to test your understanding of important aspects of the new standard and related amendments. And you can take this knowledge check multiple times. And one thing I want to note, the results of this knowledge check are anonymous, and the PCAOB staff does not intend to make them public or to use them in the PCAOB's oversight activities. So there's really no downside to taking this quiz.
So before we turn into AS 1000, we have our very first CPE code. It's on the screen. It's 657. Again, the CPE code is 657. Give everybody a second there to enter it in. Okay. Last year, the board adopted and the SEC approved a new standard addressing general responsibilities of the auditor in conducting an audit. And these general principles and responsibilities of the auditor are listed on the slide. These concepts are not new. These general principles and responsibilities were previously addressed across 4 interim standards, and AS 1000 replaced those standards, reorganizing and combining the general principles and responsibilities into a single standard. While the existing responsibilities have not changed, updates were made to achieve consistency with other PCAOB standards. AS 1000 also reminds auditors of their obligation to protect investors and emphasizes that this responsibility provides important context to the auditor's work when applying the requirements of PCAOB standards. So the new standard does not create any new principles, but it provides a more logical presentation, making the requirements easier to read, understand, and apply. As noted on this slide, in addition to the new standard, the project also included important amendments to other PCAOB standards. The related amendments address areas that are fundamental to the conduct of an audit, including clarifying the auditor's responsibilities to evaluate whether the financial statements are presented fairly, clarifying the engagement partner's due professional care responsibilities, and accelerating the date to assemble a complete and final set of audit documentation to 14 days. So why the change to the documentation completion date? Originally, when the timing was established, work papers were primarily physical papers, and allowing 45 days for completing the documentation made sense, especially for multi-location and multinational engagements. But since then, we've seen practice advance in technology, and it's been made easier to prepare and archive audit work papers more quickly than the 45-day requirement. And most firms use an electronic platform to maintain audit work papers, and many are already archiving completed files before the 45-day period. So the AS 1000 project accelerated the documentation completion date from 45 days to 14 days. With respect to the amendments to the engagement partner's responsibilities, these are not new responsibilities, but rather a clarification to the extent of the planning, supervisory, review, and documentation activities to be performed by the engagement partner as part of exercising due professional care. The slide summarizes the extent of documentation that the engagement partner is required to review, and because the engagement partner has primary responsibility for the audit, it is critical for the partner to review in sufficient detail the specific areas that are deemed important to support the auditor's opinion. The amendments also require the partner's review to be completed prior to the report release date. This slide shows the effective dates for the requirements included in the AS 1000 rulemaking. I want to highlight that for the documentation completion date requirement, the effective date takes a phased approach and provides smaller firms with additional time to comply. Therefore, for firms with fewer than 100 issued audit reports for issuers during calendar year December 31st, 2024, the 14-day documentation completion date requirement is effective for audits of financial statements for fiscal years beginning on or after December 15th, 2025. And similar to the confirmation project, the AS 1000 implementation page also has a knowledge check. And again, we encourage everyone to test their knowledge of this standard as many times as they would like.
Thanks, Lynette. The next project we're going to cover, I'm going to call simplistically the technology amendments. You'll see the formal name here on the slide. The technology amendments primarily affect two auditing standards, AS 1105, audit evidence, and AS 2301, the auditor's responses to risk of material misstatement. And the amendments are focused on matters that are relevant when technology-assisted analysis, commonly referred to in practice as data analysis or data analytics, is used. And in recent years, technology-assisted analysis has become more prevalent in practice. Auditors are using technology-based tools to obtain and analyze more information in different ways. For example, to compare company-produced information to auditor expectations or third-party information for an entire population of transactions. The amendments are not intended to address specific matters related to other technology applications, such as artificial intelligence. But the amendments are an important stepping stone in modernizing PCAOB standards. While the reason for the technology amendments stems from the use of technology-assisted analysis, it's important for me to point out that the amendments themselves apply to all audits, whether or not technology-assisted analysis is used. So with that background, we'll provide first a little bit of an overview of the key amendments, starting with those made to AS 1105. In some cases, auditors use audit evidence obtained from such analyses to achieve more than one purpose. So first, there's a provision that if the auditor uses an audit procedure for more than one purpose, the auditor should design and perform the procedure to achieve each objective. So for example, if a procedure is designed to be both a risk assessment procedure and a substantive procedure, the objectives of both procedures will need to be achieved. And AS 1105 already provides responsibilities for evaluating the relevance and reliability of audit evidence, including requirements for testing the completeness and accuracy of company-produced information. The amendments include new requirements relating to the reliability of information in electronic form that the company obtained from one or more external sources, which is then provided to the auditor. This requirement applies to information that the auditor plans to use as audit evidence, and auditors are not required to test every piece of information, external information provided by the company in electronic form. Consistent with other provisions of 1105, the new requirements do not prescribe the nature, timing, or extent of procedures. Instead, the requirements are principles-based and scalable. The amendments also emphasize the importance of controls over information systems as it relates to the reliability of information to be used as audit evidence. This continues to increase in importance as auditors obtain and use larger volumes of data and information in electronic form from the company. With respect to AS 2301, the technology amendments include a new section that describes testive details and specifies the auditor's responsibilities when investigating items identified through a test of details. So for example, auditors may use technology-assisted analysis to analyze 100% of a population, and then may identify a number of items that need further investigation. And the new requirements address the auditor's responsibilities for investigating those items. The amendments to AS 1105 and AS 2301 will take effect for audits of financial statements for fiscal years beginning on or after December 15th, 2025. And before we jump to the QC project, which is the final project we're going to be discussing, I want to point out and discuss a little bit more some of the resources we have on our website specifically geared for smaller firms that Board Member Thompson mentioned this morning. So on our website under resources, you'll see a link to information for smaller firms. And this slide reflects what you'll first see when you click on that link. As you scroll down the page, you'll see a variety of information, including links to various resources. And you'll see some of the resources take the form of videos. In particular, I want to mention the Audit Focus series that was mentioned a couple times this morning, which is that set of PCAOB staff publications that aims to provide easy-to-digest information to auditors, especially those who audit smaller public companies. And each audit focus is geared to a particular topic and reiterates application of auditing standards and/or staff guidance, and includes and offers reminders and good practices tailored to PCAOB registered auditors of smaller public companies. Topics that you can currently find in the Audit Focus include journal entries, CAMs, critical audit matters, and audit committee communications. And the Audit Focus section is updated periodically with new topics. I know one was mentioned this morning, so I encourage you to check it out. In terms of other resources available to you, aside from guidance on the implementation of new standards that we talked about, there are other staff publications on other topics, such as spotlights and other resources. And these documents may relate to current events or highlight observations from PCAOB oversight activities. And another development that I wanted to mention is what Board Member Thompson mentioned this morning, which is about the formation of the Smaller Firm Resource Group. And this group is comprised of representatives from smaller firms that will advise PCAOB staff on their experiences when applying PCAOB standards, inspections-related activities, and economic considerations. And more information about the resource group can be found on our website under Working Groups and Task Force. So one last note, and you'll hear this from Lynette and I a lot today about signing up for alerts, is on the bottom of the information for smaller firm page, you will have the ability to sign up to receive communications that are relevant to your practice. You can choose what you want to receive communications on, and it's really a great way to stay current on all of our activities. So before I hand it over to Lynette, I've got our second CPE code, and you'll see on the slide the code is 843. Again, the number is 843. We will give everyone just a minute, and then Lynette will take it over.
Thanks, Donna. Okay, last call for 843. Okay, so I'm going to spend some time today discussing the new quality control standard, QC 1000, a firm system of quality control. Here is the agenda for today's session on QC 1000. In previous forums and workshops, we have provided an overview of the standard in more detail. Today, I'm going to focus more on areas that can be scaled and where questions have been raised at previous forums or QC workshops. So by way of background, QC 1000 is the new standard that supersedes existing standards QC 20, QC 30, QC 40, and it also supersedes the existing SEC practice section requirements, also known as the SECPS requirements. The standard requires an annual evaluation of the firm's QC system and related reporting to the PCAOB. We have received questions regarding how to find Form QC for reporting, and it is accessible to view on our website under Rules of the Board and Forms. It's not ready to be submitted, but you can see the contents there. And the contents can also be found in Appendix 2 to PCAOB release number 2024-005, which was the adopting release for the QC standard. In connection with the adoption of QC 1000, the board also adopted other changes to its standards, rules, and forms. These include, among other changes, expanding the auditor's responsibility to respond to deficiencies on completed engagements under an amended and retitled AS 2901, which is now titled Responding to Engagement Deficiencies After Issuance of the Auditor's Report. Also, the board replaced its existing standard ET 102, titled Integrity and Objectivity, with a new standard EI 1000, also titled Integrity and Objectivity, to better align the board's ethics requirements with the scope, approach, and terminology of QC 1000. So let's take a closer look at the QC 1000 timeline. As Tony mentioned this morning, recently the board delayed the effective date of QC 1000 and the amended standards, rules, and forms by a year. The new standard and related amendments will become effective on December 15th, 2026. This means that a firm's QC system needs to be designed by December 15th, 2026, and a firm will need to be ready to start implementing and operating it from that day onwards in accordance with QC 1000. The firm's first evaluation date will be as of September 30th, 2027, and the first filing of Form QC by November 30th, 2027. Importantly, this delay should not be viewed as a reason to put pencils down until next year. We encourage firms to use this additional time productively, working diligently through implementation challenges, in designing QC systems to comply with QC 1000, and preparing for the implementation by the effective date. A longer runway also allows firms to perform a dry run of QC processes, particularly the new processes required to comply with QC 1000 and the annual evaluation, before the standard becomes effective. More importantly, if firms are ready, they should consider electing to comply with the requirements of QC 1000 before the effective date of December 15th, 2026, except for as to the reporting to the PCAOB on the evaluation of the quality control system. On this slide, I've included some highlights of what has changed from existing requirements to the new requirements. While I'm not going to read them to you, they've been in prior presentations, I did want to provide this today so you can find this slide handy to revisit as you need it. So let's look closer at the applicability of QC 1000 and who is affected. All firms that are registered with the board are affected by the new QC 1000 standard, but not all requirements of QC 1000 apply to every firm. All registered firms are required to design a QC system that complies with QC 1000. Firms that perform or have responsibility with respect to engagements under PCAOB standards are required to implement and operate their QC system. QC 1000 defines engagement, and it's in paragraph A3 in Appendix A. It is defined as any audit, attestation, review, or other engagement performed under PCAOB standards led by a firm or in which a firm plays a substantial role in the preparation and furnishing of an audit report as defined by PCAOB rules. So let's unpack the applicability. Under QC 1000, firms that do not have responsibilities with respect to engagements are only required to design a QC system that meets the requirements of QC 1000. We refer to this as scaled applicability or design only. At all times that a firm is required to comply with applicable professional and legal requirements with respect to any of the firm's engagements, the firm is required to design, implement, and operate an effective QC system. That is, comply with all the requirements of QC 1000, and we refer to this as full applicability. QC 1000 defines applicable professional and legal requirements in paragraph A2 of Appendix A, and you might hear me refer to it as APLR because applicable professional and legal requirements is just a mouthful. It includes professional standards as defined by the PCAOB, rules of the PCAOB that are not professional standards, and it also includes to the extent related to the obligations and responsibilities of accountants or auditors in the context of engagements or in relation to the QC system, rules of the SEC, provisions of U.S. federal securities laws, ethics laws and regulations, and other applicable statutory, regulatory, and other legal requirements. So to provide you with some clarity of this definition, an example of a rule of the PCAOB that is not a professional standard would be PCAOB Rule 2200, titled Annual Report, which requires a firm to file the annual report on Form 2. An example of ethics laws and regulations includes the ethics laws under jurisdictions that accountants are subject to. This does not include, for example, the AICPA's Code of Conduct. However, we recognize that many states adopt the AICPA Code of Conduct as part of their ethics laws, and if that is the case, then it would fall under the APLR definition. This graphic presented on the slide illustrates the determination as to whether a firm is subject to scaled or full applicability. And for reference, this graphic can be found in the scalability section of the adopting release on page 61. An important takeaway from this slide is that a firm that is not currently performing any engagements may nevertheless have to comply with APLR with respect to a previous or future firm engagement. For example, it may have a documentation retention obligation under AS 1215 with respect to a past engagement, or responsibilities for the acceptance of a new engagement that have to be performed before the engagement is conducted. For example, considering whether a firm is independent and whether the services are permissible. In these examples, the firm is under full applicability even if it currently does not perform any engagements. So, question for the group. By show of hands, are anybody here with firms that do not currently audit an issuer or a broker-dealer? Okay. Or play a substantial role? Oh, okay.
I got one, yeah.
I got one. Okay. So, I'm going to talk through this slide pretty quickly a bit, but we'll cover it here. So, what does it mean to design a QC system if a firm is subject to scaled applicability or design only? So QC 1000 includes the specific requirements in paragraph 6, which requires a firm to assign QC-related roles and responsibilities, establish quality objectives, annually identify and assess quality risks to the achievement of these quality objectives, and design quality responses to address those quality risks. Firms under scaled applicability are required to design a monitoring and remediation process. And finally, there are requirements regarding documentation of the design of the QC system. So you might be wondering, how would a firm subject to scaled applicability think about designing a QC 1000 compliant risk assessment process? And a firm can utilize its risk assessment process already developed under other quality management standards and add any additional quality risks the firm would likely face if it performed PCAOB engagements, taking into account the size and complexity of the firm. For example, one potential quality risk could be insufficient knowledge about the PCAOB rules and standards and the SEC's independence requirements that a firm would be subject to once it is engaged to perform a PCAOB engagement. In this case, a firm can reevaluate its current policies and procedures that address training to determine whether it needs to add additional mandatory training on the PCAOB rules and standards and the SEC's independence requirements. The firm would only need to operate its policy and procedures once it takes on a PCAOB engagement. Before we continue on, we have another CPE code. Let's see if this is going to adjust. There we go. The CPE code is 468. Again, 468. Okay, now that we've covered applicability, let's ground ourselves in the objective of the firm's QC system under QC 1000. QC 1000 specifies that an effective QC system provides a firm with reasonable assurance that the firm, each member of firm personnel, and each other participant conducts the firm's engagement and fulfill their other responsibilities that are part of or subject to the firm's QC system in accordance with APLR, and that each engagement report issued by the firm is in accordance with APLR. This is referred to as the reasonable assurance objective. And we're going to dissect some of the terms that's used in the reasonable assurance objective to better understand the scope of the standard. But before we do that, the concept of reasonable assurance is consistent with QC 20, which is the board's current quality control standard in place until QC 1000 becomes effective on December 15th, 2026. However, QC 1000 goes further and extends the reasonable assurance objective to cover not just the firm and its personnel, but also the use of other participants. This is a graphical depiction of the definition of firm personnel in the adopting release on page 51. It can also be found as a defined term in Appendix A under paragraph A5. Firm personnel are individual proprietors, partners, shareholders, members or other principals, accountants, and other professional staff of a registered public accounting firm whose responsibilities include assisting with the performance of the firm's engagements or the design, implementation, and operation of the firm's QC system, including engagement quality reviews. Professional staff includes employees as well as individuals such as non-employee contractors, consultants who work under the firm's supervision and direction and control and function as the firm's employees. These individuals include, for example, secondees and lease staff who work under the supervision or direction and control of the firm. Professional staff does not include persons that are engaged only in ministerial tasks. And you can see some examples in the blue box on the screen. This is the graphical depiction of the definition of other participants, which can also be found in page 51 of the adopting release and paragraph A7 of Appendix A to the standard. With respect to work performed in connection with the firm's QC system or the performance of its engagements, other participants are accounting firms, foreign or domestic, registered or unregistered, accountants and other professionals or organizations other than firm personnel whose responsibilities include assisting with the performance of the firm's engagements or the design, implementation, or operation of the firm's QC system, including engagement quality reviews. Again, you can see some examples in the blue circles by the definition. I do want to point out that persons performing some roles, such as the engagement quality reviewer or personnel at shared service centers, may be either firm personnel or other participants depending upon their relationship with the firm. For example, an engagement quality reviewer employed by the firm would be considered firm personnel, whereas one that has been contracted from outside that is not functioning as a firm employee would be an other participant. And I would like to clarify one important point, that the QC system does not operate over other participants. Rather, a firm would need to consider the potential quality risks that could result from the use of other participants, including other firms, outside specialists, or external EQRs. The last point I'd like to make is that QC 1000 references firm personnel and other participants throughout the standard, and the firm would need to understand how other participants fit in their QC system and engagements, and what other specific quality risks could be identified, and develop quality responses to address those quality risks.
All right, now that we've covered the objective of the QC system, let's briefly talk about the components of the firm's QC system under QC 1000. QC 1000 shares the same basic structure as other quality management standards, including the same 8 components, a risk-based approach to quality control, assignment of an individual to be ultimately responsible and accountable for the QC system as a whole, assignment of individuals to 3 roles of operational responsibilities that are substantively the same, many of the same quality objectives, and many of the same specified quality responses. If your firm is subject to the requirements of other quality management standards, you do not need to maintain separate quality control systems, one for QC 1000 and another one for ISQM1 or SQMS1. Firms can develop a single QC system for their entire practice that satisfies PCAOB requirements and the requirements of other professional standards to which the firm is subject. While QC 1000 has additional and more stringent requirements, firms can integrate those into their unified QC system, eliminating the need for multiple systems. Many of the same policies and procedures developed under another quality management standard will also be applicable for QC 1000. Now, let's spend a few minutes discussing the roles and responsibilities that QC 1000 requires a firm to have in its organizational structure. QC 1000 requires firms to assign 4 distinct roles within the QC system. As I've already mentioned, if your firm is subject to other quality management standards, these roles should already exist at your firms. The principal executive officer, or highest-ranking executive, is ultimately responsible for the QC system as a whole. Even if there are co-principal executive officers, both are ultimately responsible and accountable for the QC system as a whole. 2 key roles, ultimate responsibility and operational responsibility for the system, must also certify the firm's QC evaluation on Form QC. These roles are highlighted with stars on the right side of the slide that you'll see. All individuals assigned to these roles must be firm personnel. Other participants can assist firm personnel, but firm personnel must hold and be accountable for the roles. In small firms, one person may hold multiple roles, but roles cannot be shared or split. So, for example, the role for operational responsibility for the firm's compliance with ethics and independence requirements cannot be split between two roles, one for ethics and one for independence. What a firm can do is structure its organization so that the single individual with operational responsibility is supported by multiple individuals. Those multiple individuals can be firm personnel or other participants. I want to make one practical observation. In today's environment, many firms operate under various practice structures. So, for example, alternative practice structures. These arrangements can create challenges in identifying whether individuals fall within the definition of firm personnel or other participants under QC 1000. It is important for a firm to understand whether these individuals are firm personnel or other participants, as they are treated differently under QC 1000 requirements. For example, as we've just learned, all operational roles have to be assigned to firm personnel only. In addition, for example, QC 1000 requires a firm to provide mandatory training to firm personnel, complete their performance evaluations, and ensure firm personnel adhere to the firm's appropriate standards of conduct. These requirements don't apply to other participants.
Thank you, Donna. Let's move on to talk about some scalability in QC 1000. So firms are required to apply a risk-based approach, which is inherently scalable to the design, implementation, and operation of the QC system in the context of their own practice. The standard provides that the firm will tailor the design of its QC system for specific facts and circumstances, such as the size and complexity of the firm, the types and variety of engagements it performs, the types of companies for which it performs engagements, and whether it is a member of a network, and if so, the nature and extent of network relationship. So I'm going to provide you a brief overview of the firm's risk assessment process. First is establishing quality objectives is the first step in the risk assessment process and forms the basis for the identification and assessment of quality risks and the design and implementation of quality responses. The standard defines the quality objectives as the desired outcomes in relation to the components of the QC system to be achieved by the firm. Quality objectives are specified in QC 1000 for each of the 6 components that address aspects of the firm's organization and operations. In addition to the quality objectives required by the standard, the firm is required to establish any other quality objectives it deems necessary to achieve the reasonable assurance objective. Next, firms are required to identify and assess quality risks for each of the established quality objectives. And unlike the quality objectives, which are specified in QC 1000, the quality risks are not specified in the standard. Instead, firms are required to identify their unique quality risks based on their own facts and circumstances. And quality risks should be specific to the firm and the engagement it performs. Therefore, identifying quality risks as the inverse of the quality objective generally would not be specific to the firm and its engagement and may result in the firm designing quality responses that are not achieving the established quality objective. Relatedly, the standard requires a firm to obtain an understanding of the conditions, events, and activities that may adversely affect the achievement of the firm's quality objectives. This understanding underpins the firm's identification and assessment of the quality risks that are most relevant to the achievement of the firm's quality objectives. Once the firm identifies and assesses its quality risks, it is required to design and implement quality responses to those quality risks. Quality responses are policies and procedures designed and implemented by the firm to address quality risks. In addition, firms are required to take proactive measures to address new quality risks once they may come to the firm, up to the firm through its periodic risk assessment by modifying the quality objectives, quality risks, and quality responses as necessary. And I would like to point out that the QC guidance that is published on the implementation page includes some scalability considerations for firms of various sizes that you might find helpful as you are working through your risk assessment process. Another aspect that I'd like to highlight is that the quality responses that your firms develop could be a common quality response across QC 1000, ISQM1, and or ISQM1. So let's look specifically at an example for the acceptance and continuous engagement component. On the screen, I've identified a quality objective in all three standards. This quality objective is one where all three standards have about relating to the firm obtaining the necessary resources to perform the engagement. So in our example, the firm identified a quality risk that the firm may accept a new engagement in a new highly specialized industry without adequately assessing whether it has or can obtain the resources to perform that engagement. A firm's possible common quality response to the quality risk could be to require confirmation of its ability to obtain the resources with the specialized skills needed for a new industry, and to have firm leadership review and concur with the confirmation board before accepting that engagement. And another reminder on quality responses is that there might be multiple quality responses for each quality objective based on the quality risks. So one quality response may be common across all quality management standards, but there may be additional quality responses necessary to address quality risks specific to one of the standards. The monitoring and remediation process is an integral part of an effective quality control system because it creates that feedback loop to inform the firm's risk assessment process. Within the monitoring and remediation process, there are a few scalability items that I would like to highlight. This graphic demonstrates the steps of the monitoring and remediation process under QC 1000. The steps are to design and perform activities to monitor engagements and the QC system, determine whether engagement deficiencies exist and respond, determine whether QC observations and QC deficiencies exist, perform root cause analysis of QC deficiencies, and design, implement, and test remedial actions to the QC deficiencies. I want to make an important point here, and that is that firms would need to consider, and when designing their monitoring activities, that is that under QC 1000, individuals are required to remain objective when performing their monitoring activities. So unlike the existing quality control standards and other quality management standards, self-monitoring is not permitted within the firm's monitoring and remediation process. What this means is that individuals are not permitted to perform monitoring procedures over the same areas in which they are responsible. Individuals generally cannot monitor those activities because they would not be objective, which is required in paragraph 44E in the resources component. I want to highlight another scalability consideration, and that is that it's meant to assist smaller firms when they design, implement, and operate their efforts for monitoring activities. The note to paragraph 61A of QC 1000 states that for firms that issued engagement reports with respect to 5 or fewer engagements for issuers, brokers, and dealers during the prior calendar year, engagement monitoring activities may include monitoring audits not performed under PCAOB auditing standards, provided that such audits are selected including using the factors in paragraph 64, and that instances of non-compliance with applicable auditing standards identified through monitoring are treated as if they were engagement deficiencies for purposes of paragraph 68D and QC observations for paragraph 72. And I want to emphasize here that this consideration for smaller firms does not mean that the firm can inspect no PCAOB engagements in a particular inspection cycle. On the contrary, audits not performed under PCAOB auditing standards cannot be used for the requirement to inspect on a cyclical basis at least one completed engagement for each engagement partner. So let's consider a scenario where the firm is the lead auditor for 4 audits under PCAOB engagements in 26 that are performed under AICPA. The firm has 5 partners, and 2 of which work on PCAOB engagements. The firm's engagement monitoring activities include monitoring certain of its completed engagements each year, selected taking into account the factors in 64, and because the firm issued audit reports for 5 or fewer engagements in the prior calendar year, it includes all 30 of its audits in the population to select for testing completed engagements. The firm's engagement monitoring activities also include for each partner performing PCAOB audits, inspecting at least one PCAOB engagement during a cyclical period. And this particular firm determined it to be 3 years for that cycle. Since the firm also includes non-PCAOB engagements in the population, the firm's engagement monitoring activities over the next several years could look something like this on the screen. If the firm was not permitted or did not elect to include non-PCAOB audits in the population for engagement monitoring activities, it would be required to do additional monitoring of PCAOB engagements in order to perform engagement monitoring activities each year. Here's another CPE code. It's 438. Again, the code is 438. So the last item we're going to talk about is documentation. And firms must prepare and retain documentation of the design, implementation, and operation of the QC system and of the annual evaluation of the QC system. This documentation is required to be in sufficient detail to support a consistent understanding of the QC system by firm personnel, including an understanding of their roles and responsibilities with respect to the firm's QC system. And similar to AS 1215, it applies the experienced auditor threshold when determining the sufficiency of documentation to be prepared and retained by the firm. Further, there's a note in the documentation requirements which states that the documentation must include documentation that enables an experienced auditor to evaluate the operation of the quality responses. The extent of documentation to evidence whether those quality responses operate effectively is going to be dependent on the size of the firm's PCAOB practice and the assessed quality risks and established quality responses. So QC 1000 does include a list of specific matters that firms are required to include in the documentation, and these matters are in paragraph 82 as well as on the screen. Just a couple practical considerations I'd like to highlight, since we have received a number of questions about documentation, is that the QC 1000's documentation requirements are principles-based and designed to be scalable. So when deciding on the form, the content, and the level of documentation that the firm will consider, among other things, would include the nature and circumstances of the firm and the nature and complexity of the matter that is being documented. We have received, like I said, many questions, so some other things you might want to think about when you're doing documentation and determining the appropriate level of documentation is what documentation is necessary to demonstrate that a quality response is operating as intended? Would someone else unfamiliar with the work understand from the documentation how that response operated during the reporting period? And those answers can help guide the level of detail, the format, and the frequency of what you document. Another practical consideration I'd like to highlight is that firms are not expected to produce and retain additional documentation to demonstrate the operating effectiveness of a quality response for PCAOB inspection purposes. However, even if a firm decides not to monitor a certain quality response within a given year, the firm is still expected to retain documentation of the operating effectiveness of its quality response and provide it if it was selected for inspection. So firms are required to assemble their QC documentation related to a particular QC reporting period ending September 30th for retention no later than December 14th. This is referred to as the QC documentation completion date. And this slide demonstrates the entire cycle from start to the end of the reporting period, and it also references the applicable paragraphs in the standard. And firms are required to retain documentation for up to 7 years from the QC documentation completion date, unless a longer date is required by law.
So I want to make a quick plug for some of the resources that are available on our implementation website. And so this is the quality control implementation page. The page provides an overview of the standard, information about how to contact the PCAOB with questions, and a number of resources and tools for implementation. We've provided a number of staff guidance documents to assist with implementation, including a comprehensive staff guidance document over QC 1000 and one over AS 2901. There's also a practice aid that provides a high-level overview of certain features unique to QC 1000 and a tabular comparison of QC 1000 and SQM1 and SQMS1. We also provide staff presentations over many aspects of QC 1000, as well as another plug for our series of knowledge checks over various aspects of QC 1000. And finally, at the bottom of the QC implementation page, you'll find our interactive chart. And that's really handy for someone who's looking for implementation resources related to a specific aspect of QC 1000. So for example, if someone is looking for ethics and independence resources, you can click on the icon in the interactive chart, and then the hyperlinks will take you to the resources available for that topic, which in this case is a guidance document, a knowledge check, and a staff presentation. There you go. As we continue to update, we'll continue to update our website as we develop more implementation resources, and the QC implementation webpage also includes a phone number and form for contacting the PCAOB related to standard-related inquiries. And if you're subscribed to PCAOB News, you will get a notification when the page is updated with new resources. And if you have not already subscribed, again, I'm going to give another plug to subscribe today. It's a great time to sign up for updates. I recognize we're pretty much at time. We did get a handful of questions. I will cover just one really quickly related to the document's completion date amendment, and if we could clarify that. So the AS 1000 project did amend the document completion date from the 45-day period to a 14-day period, and that was effective December 15th, 2024, except for, as Lynette had pointed out, for smaller firms, there is a phased-in requirement for the 14-day document completion date period, and that's for firms with fewer than 100 issued audit reports for issuers during calendar year December 31st, 2024. The 14-day document completion date requirement is effective for audits of financial statements for fiscal years beginning on or after December 15th, 2025.
And for other questions, if you do call our standards line, or there's a form you can also fill out, somebody will call you back.
Yeah.
So please use that, and feel free to enter in any of the ones that we were not able to answer due to time. So thank you.
Thank you.